Hello. Today I am going to share my thoughts about life insurance. People always get confused when it comes to making a decision about which insurance policy to select. To cover one's life's risk, it's always better to go in for a term life product. And the surplus amount which one would be having can be invested in other income yielding instruments like mutual funds, fixed deposits, exchange traded funds, or in precious commodities. Because if a person is going to invest in the so-called money back policies, endowment policies, or child protection policies, and so on, always a component of that investment or the premium that we pay is taken away to cover the life risk, just like a term life policy, and only the remaining component or remaining portion is used for investments. And the investments done by insurance companies, they are not very transparent. They don't disclose their full portfolio very often, and the income or returns generated on that portfolio is not very transparent, and the modalities of how the surplus income generated is distributed to the shareholders or the policy holders, that's also not very transparently disclosed. So to cover one's risk, it's always better to go in for a term life policy, and the additional investment can always be made in other instruments that will yield a better rate, a better interest income, or a dividend income, or a profit compared to what one would have earned if he or she had taken the other traditional insurance policies, that is the non-term life insurance policies.